Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Wednesday, December 11th, 2013. Prior to the November Thanksgiving holiday, S&P futures broke out above the previous multi-year high at 1773 and rallied up to a new multi-year high at 1812. Last week, the S&P sold back down to retest support at or near the 1773 price level and rallied back up to the multi-year high. Today, the S&P sold down from the multi-year high and traded all the way through last week's trading range, breaching support at Thursday's low and auctioning down again to 1776. The initial rationale by the financial media for the prior week's sell-off down to the 1773-1776 price level was based on concerns that the Federal Reserve would begin tapering its extraordinary, unconventional, accommodative monetary policy, otherwise known as quantitative easing. On Friday, when the S&P rallied up through the trading range and auctioned back to the multi-year high on Monday, the rationale behind the rally was that market participants were encouraged by the positive U.S. economic data and therefore were no longer concerned about the implications of the Fed tapering. Today's sell-off, wherein the S&P breached minor support at 1800 and sold down below last Thursday's low at 1782, was attributed to concerns regarding Fed tapering. Financial media headlines are nothing but a source of misinformation. Traders who try to focus on fundamental data from the financial news media are always encouraged to buy the high out of optimism and to sell the low out of fear. The 1773 low, as you can see illustrated here on this chart, is a key support level. It was a prior multi-year high at the end of October. It was the breakout point in mid-November. If the S&P fails to find support during the pullback to 1773, and sells back down into the previous trading range, all the gains for the past month will have been wiped out. The next support level at the midpoint of the lower trade cluster is down at 1750. Below the 1750 price level, some 23 points beneath the current major support area, the next support level is down at 1730. 1730 was also a previous multi-year high and a transition point where the S&P broke out and established the upper trade cluster. During today's sell-off, there was little or no major retracements. The resistance or supply levels that developed during today's session began with the breakdown of minor support at or near 1800, 1798. The 1794, 1792 price level has played the role of a over-under or pivot point. The breach of support at the December 5th low, down at 1782, is also now a minor supply cluster. Should the S&P hold support at 1773, we would expect to see the market auction back up at least to the 1784 price location. In the context of today's late in the day sell-off, there is a likelihood of the market encountering resistance during a retracement up to 1782, 1784. A more significant resistance level is located at 1792, 1794. That concludes our daily recap for the S&P 500 E-mini. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log on and join us some morning at the open.